I would love you can take it anywhere you want. I'm sure you have all kinds of cool things to talk about. I'd love to hear your views on 2022. Clayton, a lot of people are just blatantly not believing me when I've quoted some of the numbers that you've given me regarding refinance volume for next year and things like that. They're just still in disbelief. And I've been telling people, listen, batten down the hatches. It's going to be purchase time. The good news is I think it's going to be purchase time for a long time. I think we got years of that based on no inventory and how many people want to buy. But I think the refis are going to go by the wayside. So if you're making your money doing refis, I think you need to be really, really, really ready for that. So Clayton Collins, HousingWire. Clayton, talk to me. Give me what's gone on since the last time we talked, or what's the most topical? What happened yesterday? Talk to me.
Yeah, well, thanks for having me, Joel. It's always a pleasure to join you for the community call. And yes, I will use the chat function to share some articles, and really encourage everybody that's coming in on the Zoom to drop questions in below. And even if I can't answer them or Joel can't add some color, I will pass them over to our HousingWire and Real Trends newsroom and get those answered for you in the form of an article. And hopefully we're covering the topics that are helpful for each of you and your roles of helping borrowers and helping people get into homes in this incredibly busy and competitive purchase market. Like Joel had kind of set the stage with, it has been busy, and the data backs it up. I think we're in a time of the year where we typically see some purchase and refi volume and application levels starting to taper off as we go into the holidays, and that's certainly not what the data is showing us in fall of 2021. So for the week of the 19th, so we're going back a week and a half now, but the data came out last week. We saw the third week in a row where purchase volume continues to grow and tick up. A really positive signal that signals the demand that we're seeing on the home buyer side, and also that the health of this housing economy, despite Delta and Omicron and everything else that we're dealing with, we're still seeing demand for homes. Believe it or not, hey, demographics win. So last week, purchase index was up 4.7% from the prior week. And what's really notable about that, on top of seasonal trends, is that rates were up for that same week. So despite a small uptick in the average 30-year fixed rate mortgage rate, the volume went up. So we can't say that it's a 100% rate driven market. That's even true for refi. So while purchase was up 4.7% last week, refi was up about 0.5%. So say let's call that flat, but refi is holding up even in a market where rates ticked up a little bit. Joel
Clayton, you think that's what I call the boo market? Boo, Halloween. Oh, rates just went up. If you're going to refi, you better do it now. Because I saw a lot of that going on. You think that was a big part of that?
The quote out of the NBA was from Joel Kahn was, borrowers continue to lock in mortgages in anticipation of higher rates in the future.
Boom. There we go. Okay. All right.
So the rate movement wasn't extremely meaningful, but it was still a tick higher. So I think if I have my numbers right here for conforming, rates increased to 3.24 on average, and for jumbo it went up from 3.26 to 3.28. So we're talking about a couple bips here, but it's still upward movement that resulted in increased application volume. So something really notable there. Today, pending home sales data came out, and we saw a massive rebound in pending home sales volume. So pending numbers are a monthly measure. So we're just seeing October right now and comparing against September. September was a little bit soft, but October bounced up 7.5% over the prior month. So when we think about applications, we're talking about a little bit a metric a little bit closer to the close of an actual sale, where pending home sales is a little bit more of a lagging indicator, but really good to see it kind of continue to pop up and show progress as we go into the fall, out of the traditional summer home buying season. We're seeing strength as we go into the winter months, and that demand keeps holding up.
Yeah, I'm telling all my VIPs, all my one-on-ones, like there is no excuse. You better hit January running with a bang. None of this, oh, I only closed 4 million. No, close 10 million. There's no reason. The demand is there. Everybody is all in. Yet we have Christmas and New Year's basically on the weekend this year, which puts people even more all in. And the demand is so high, there's just no excuse. Meaning bring it. Don't give me that. Oh, it's January. Wah, crap. Let's go. The loans are out there. Go get them. Clayton, if you're going to hit this, tell me. But thoughts on values? Any stuff on values? You bullish there? You think it's going to keep going up? You think these people? Oh, I'm going to wait for it to fall. Have literally the bus went by and they can't get on. Any thoughts on that, or were you about to hit it?
No, I wasn't. That wasn't where I was headed next, but I'm happy to do it. I'm not
Yeah.
backed up with data for this one right now. But
Okay.
ultimately, if you believe in any basic economic principles, as long as demand keeps increasing, so let's call pending home sales and mortgage applications our demand metrics, that supports increased home prices. And so the question we have is not, do home prices continue to increase in 2022? It's at what degree do they increase in 2022? And I've seen very few economists in recent months come out with like any credible guidance that we're going to see home price appreciation in 2022 like we saw in 2021, which in many markets exceeded 20%. I don't see anybody really calling for that type of appreciation in 2022, but we're still seeing really respectable numbers. That makes it an attractive market for home buyer or home owners who may benefit from that increase, but an increasingly hard bus to get on for first time home buyers. However, low interest rates, the potential for wage growth, we're still not looking at an unaffordable market. So we kind of have the constant push and pull between anecdotes and data is telling us this market is still affordable, though the anecdotes tell us that people are getting left behind, and that is that's the constant push and pull between what you hear on the street and what the economists are telling you from what the data shows on incomes and lower interest rates and what that means for housing affordability.
All right. I'll let you keep going down your list because I know you got other stuff.
Yeah. Well, I don't know. What do you? Let's stay on prices for a second, Joel. What are you kind of hearing from the folks that you work with?
The
How are we
the
feeling in
field
confidence on
the
the street?
field with pricing, depending on unless it's just an incredibly hot like 3-2 starter that's actually in the game for lots of people. Instead of there are 15 offers, there's 7, 6 or 7. So maybe the offer count is cut in half, but the appreciation is still there. So it's interesting. Did people give up? Did they stay in their current house? Meaning, what's the reason? Because it's not the rates. We know it's not the rates. It's not demand. We know demand's there. What's the reason there still aren't 12 offers? Why is there 6? And that's not a rhetorical question. That's a literal question. I don't really know the answer because I'm seeing numbers batted around, Clayton. This might have been from you, so you can directly from you, that we're 5 million houses short from people that want to buy them. I mean, literally 5 million houses plus short from people that are raising their hand going, I want to buy a house,
Yep.
which lends itself to, massive multiple offer situations. So I don't know whether people got some fatigue a little bit and said, hey, I'm going to wait, which again, I don't think is too smart. Because I personally do not see the house values dropping anytime really soon. I don't know. From what I'm seeing on the street level, I'm not seeing that. Straight lender stuff. Clayton, the loan officers that are dominating these markets are the ones that own what I call like my BICPP system. They are very adept at a real pre-approval, not crap pre-approvals, completely docked LOXs, large deposits. everything in where they can get a contract and close fast without blowing their place up. And their agent partners are able to write those faster closes, assuming we can get the appraisal. That's a separate issue. Assuming we can get the appraisal, can write those quicker turns because these loan officers are going to heroic levels docking files up front. That's a big trend. I'm seeing, borrowers playing footsie with their docs are not, that's not going on anymore. Or the agents are pressing them. Hey, if you don't want to buy, that's fine. But if you want to buy, give my lender the docs, please, so we can really get you completely pre-approved. I mean, that's what I'm seeing on my end. That's what I'm hearing. I'm not hearing any dipping. I'm not hearing anything going down. I'm also really not hearing a bunch of low appraisals, which is amazing. We have a lot of comps. I don't know if there's anyone on the line in your market, you're seeing a lot of low appraisals. I'm not hearing a lot about it. I'm hearing the base, your basic home inspection stuff. If you're doing a home inspection, some of those contingencies are back in play as well now, Clayton. It's not the I'll buy your house for 50 over, no contingencies crap anymore. The contingencies are coming back. Whether it's loan approval, home inspection, appraisal is a little dicier depending on the buyer or depending on what type of loan it is. But some of that stuff is definitely back. For sure, but that's what I'm seeing on the street. Anyone else can hop in. I don't know if you're hearing the same thing at your level. That's what I'm hearing from my people.
Joel, I can comment if you like. It's Pete.
Oh, is that Pete Griffin? You're not allowed to talk unless we can see it. Where are you?
All right.
The reason Pete's not putting his camera on is because he's drinking right now. Oh, there he is. Go ahead, Pete. Go. Pete Griffin, Fredericksburg, Virginia, leaks into southern DC Metro. Everybody, go ahead, Pete. Loan officer.
Yeah, what I'll say on housing, it's a bit of an anomaly because in your more metro areas, more urban areas, there still seems to be a lot of competition. I got folks that are asking for letters for $625 for a house that's on the market for $575. But then in the areas where I got the rural agents, in the 250, 300s, they're going in and asking for closing costs and getting them. So it's kind of a strange anomaly. I don't know if that's unique to Virginia or if that's what folks are seeing across the board, but very, very competitive in the middle upper range for our area, more urban, more competition, more rural, less competition. That's what I'm saying.
So Pete, to me, it makes sense to me with the whole COVID factor as people start going back to work, even if it's 2 or 3 days a week, because that would make that house further out less desirable if that person has to commute, which kind of makes sense to me. If you got to go commute again, then we come right back into that market where, of course, when you look at bands around a metro area, it get super expensive, kind of expensive, better. The people willing to drive 45 minutes usually get the best deal. That's what that sounds like to me. And Clayton, Pete is in an area where he's just touching on people commuting to DC from his area. Mm-hmm. But you could have a short commute or a long commute, but still be commuting. Really, I mean, Pete, that's what I would think is going on. Anybody else seeing seller concessions in more rural areas on where you are? Are you actually seeing agents able to negotiate that? Anyone else? You can go in the chat. Jen Miklos is nodding her head. Jen, you could get in rural area in 2 seconds. You're seeing none of it. Nothing, huh?
No concessions at all.
Nothing.
That's Florida, though, right, Jen? I mean, that's like if you look at the heat map of where and this is. And Joel, I'm glad we're going down this kind of local focus because we can talk about applications and pending sales at a national level. But when we start talking about home price trends in 2022 at a national level, it's kind of a waste of time because the market's moving as real estate has always been. It's local, but it's super regionally focused right now. But as you look at the heat maps of hot and healthy markets and where there's softness, I think every major city in Florida is bright green on like full on growth. So and it doesn't surprise me at all, no matter where you are in the state of Florida, in the center of the state or in Southwest Florida or on the coast. I mean, it's hot.
Yeah, no, it's, I mean, look, Tampa was, you got Boise, Idaho, which is overrun by people from California, and most first-time buyers are completely priced out of the market. They can't even buy. Nashville, which is Hollywood East. Tampa, Jen is a suburb of Orlando. She's in Claremont. But you look at these hot on fire cities. I mean, Boise, Idaho, Clayton, literally the fireman and the nurse cannot buy a house. They're out. They're out. The house that was 300 is like 480. They can't buy it. They're literally priced out completely. And that's people fleeing California. I mean, it's literally, those are California buyers going to Idaho. Shada is saying, it's a DM. She's in Los Angeles Metro. She is seeing buyer credits there. She is seeing agents able to negotiate credits. All right, Clayton, what else are you seeing trending? Anything, you go anywhere, jumbo, anything going on in the markets in general that my group would love to hear about?
Yeah, so I'll hit two more things. So on Friday, we saw the Census Bureau's numbers on the new home sales report, which at a headline level was a miss. It came in at 745,000 units. I think the projections were 750 or higher by most people, so it was soft. But builders still came out extremely confident, and I want to kind of hit on the reason for that. Is we were seeing total supply of new home inventory start to tick up past 6 months, which like starts to get like a little bit close to like a market where builders will pull back on creating new housing inventory or plans. But what we saw, even despite that miss in new home sales, was a stabilization of inventory. So that means more buyers are coming in for the new inventory versus existing, and that gives builders another leg to keep pushing forward with new construction. So this sounds, I mean, it sounds kind of wild when you hear about how short the market is on inventory, but despite that, we're still like kind of looking at we're playing in a threshold where builders are questioning whether they keep building or pull back at all. Pete, I see your hand go up again, or is that kind of a stuck from the last comment?
I think
I'm good.
Tito Alberto Gomez asked a question. Are you hearing anything about houses being so overpriced that they're just sitting? I'm not really hearing that anywhere from anyone right now. At least I haven't yet. If anyone's hearing that, please chime in. Okay, so builders.
Well, I think, like you mentioned, Boise a minute ago.
Yeah,
Boise is actually a market that I've heard is not like the healthiest because prices have gone up so fast, and so there are some regional buckets where the markets saw insane appreciation in 2020 and 2021, which priced out the folks that actually work in those MSAs. So the only shot at moving the inventory is luxury buyers coming in from the West Coast, and that is slowing down the top end. So like there's some of those markets, the Zoom communities, where the only inventory is like quote unquote luxury, and that is slowing down a little bit. So I think that's going to be the answer to that's going to be super like specific and not even state level, but kind of getting down into the hot communities that people moved to over the last year and a half.
Yeah. Okay. So you builder, you were saying you had two things, something else as well besides builder.
Yeah. Well, I mean, the last thing is the good and bad of the Omicron variant. We saw the stock market get rocked on Friday, and I think that stock market movement combined with fear over this variant is likely the precipice for pushing down bond yields and preventing the next Fed rate hike that people were predicting for December. So I'm not coming here today to say that there is not going to be a rate hike in 2021. But a lot fewer people are expecting that now than they were prior to last Thursday. So there's our lead analyst Logan Moshami writes about this a lot, but there's a threshold at 0.56, 50 basis point yield on the 2-year yield. And once you kind of tick above 0.56 in the 2-year yield, it's pretty reasonable to expect the Fed to start thinking about rate hikes. Friday, that yield pushed back down below 0.56, and I think that kind of puts us in the in the clear on rate hikes in the coming months. So I kind of coming back to that boo factor that Joel talked about. That boo might be pushed out a little bit right now, so we could have a prolonged, longer low rate environment than anyone predicted, and we're going to be covering this pretty closely over the next year. But the NBA and other sources have been predicting that interest rates tick up a lot more aggressively than I would have guessed. The last week's NBA's 2022 projection for year end is 4%. And we're going to be writing about some scenarios where rates might be as low or lower than 2021 and 2022. So this low rate environment might be something that we're going to be operating in for a little while, especially as variant shares continue to depress the bond market.
Yeah, it's that factor is the wow, the crazy factor that nobody. It's unpredictable, what's going to happen. And then, of course, if you live in Florida, right, Jen, there is no Omicron because technically there was no COVID ever in Florida. Like literally it stopped at the line. There was a sign, no COVID allowed. So Florida is never affected by that anyway, Clayton, but we know that. Jen, you can laugh tongue in cheek, but it's true. They don't even allow masks in that state. So, that's a huge factor, but I'm going to tell everyone this right now. I love hearing that. Because I love watching loan officers and real estate agents kick ass all the time, but don't let that put fake wind in your sails. The name of the game is purchase transactions right now. It's relationships with agents. That's what's going to keep wind in your sails basically forever. I think Clayton, last time he was on, was talking about, robust market through 2025. It might even be further now with the amount of people that are trying to buy and want to buy. And as incomes go up, I don't know about you all where I am. Minimum wage is very high where I am. As incomes go up, even though the houses went up a little bit, people can still afford to buy them and they want to buy them. They want to buy something, which means there's a lot of mortgage loans for us to originate. But as always, our agent partners are where that funnel starts. And if you're not building those relationships and working on them every single day, then you're not going to be first in line. And I can tell you, and I'll tell you this, I think it's true, over the next 12 to 18 months, we're going to see a lot of loan officers go away. They're literally going to go away, or they will be working on a team with a big dog loan officer closing 50, 60, 70 loans a month. And I don't mean purchases. I don't mean refis. I mean purchases. And there'll be a place for those loan officers that know how to take a loan application to work there. But there's not going to be, you're just flat out not going to be able to compete if you're not working on those relationships. If you're watching the real estate community, you're seeing consolidation there. And you're seeing big dogs get bigger, which means, there's less agents as they end up on teams and whatever. There's less people for you to even meet. But you have a window right now, especially in the holiday season where everyone's festive. If you're not, I'm going to put it out there right now. If you're not doing 5 B2Bs this week, I'm just letting you all know that's a fail. If you don't have 5 this week, it's a fail. You should have 5 every week until Christmas Eve. Okay, because it's a festive time of the year. Agents have had another great year. Okay, so there's most, if not all of them, will meet you for a glass of wine or a beer or whatever, or lunch. They will if you're asking. I know there's some people on here right now that are not calling out right now, but I know we're doing 5 B2Bs this week for sure. And it is very important that you stay out there. You do not get buried back in your office. The other thing, Clayton, the docking of the files is a game changer between super successful LOs and LOs that cannot get over a certain volume point. They just can't get past it. Their staff can't get past it. They can't get past it. The other thing, just in general, some of the bigger companies are definitely laying off ops people. And when I'm talking to these ops people, I'm interviewing them for some of my VIP one-on-one LOs whose business is going up, not down. They're being let go because refi volume has gone from 10 loans to 2, and there's nothing for them to do. So that's already going on right now. But good loan officers are propping their teams up, not letting people go. They're running their own little company within the company. Clayton, I'm seeing that at my level all over the place, where, companies will come out with some mandate. Hey, we got to get, we have to lay off 100 people, whatever. I don't care who they are. We have to let them go. And then I'm like, okay, but we got to put these 3 loan officers in a bubble. We're not laying off any of their people. In fact, we need to give them more people because their volume's going up and it's purchase volume going up. It's these refi people that are just going away. Sorry, Clayton, you were going to say something.
Yeah, I was just going to kind of back you up on the refi purchase mix a little bit. So we talked about the mortgage application volume, and we talked about like kind of week over week how we're trending. But when you compare it to prior year, refi volume's already down 33%, and for the week of November 19th compared to the week of November 19th from 2020. And I just referenced the MBA mortgage finance forecast, and the numbers, they don't need to talk about this every month because they haven't changed a lot, but we're projecting on a unit basis close to 64 million refinance units in 2021 with a projection of I'm getting my commas mixed up here. 6.4 million units in 2021 and 2.3 in 2022. That's a massive drop off in refi units, and purchase is growing. It's going from 4.7 to 4.8. Not a huge growth number from a unit basis, but it's upward. It's an interesting data point to keep following.
Yeah, for sure. So everyone, welcome back after the long Thanksgiving holiday. Those of you that are going into holiday mode right now, I would encourage you not to, and to put the pedal to the metal. And I would dare you to make December a huge app month and make January a massive closing month. I dare you to come out of the gate strong and not play that, January is always slow game. I mean, if you close 30 loans a month, and close 30 loans in January as well. There's no reason, because it's January, I'm going to close less. I think if you talk to your agent partners, the good ones are not slowing down. I think they got buyers. They're bringing the heat. They're not saying, I need to go shopping. They're selling houses. And I think you need to be in front of them, and there's just no reason to not keep this roll going. Like I said, I think this roll is going for a while on purchases. I really do. And I don't care if the rates go up to 4.5. Who cares? If people want to buy, they want to buy. A PITI or your payment at 4.5 is still basically nothing. Okay. It's not, I know it's shock to these borrowers and to some of these agents that have never seen an 8 or 9 or 10% interest rate before. But the reality of it is those of you that are smart don't sell rate anyway. You sell payment. You explain things by payment. And when you look at the payment, especially with how high rents have gone through the roof, it makes it even easier if the rates go up a little bit to explain to people why they should be buying. Even though I'm going to agree with Clayton, I think if we keep seeing wacky stuff go on, I don't think the rates are going up anytime significantly anytime soon. So Clayton, any final words? I'm looking at the clock. I had you for 32 minutes. I always promise you 30. Any final words? Clayton, how do people find you? Let everyone know that's first time on the call. There's so much good stuff on your site that I know people don't go look at. There's great stuff for agents. Give a little fast commercial, and then we'll get you out of here.
Yeah, visit HousingWire.com for nearly all of the news and information we publish at HW Media, all the housing market news and mortgage lending news, and we do a daily newsletter now for loan originators called Lending Life, which kind of consolidates a lot of the links and information that we talk about on the community call. And we also own a brand called Real Trends, which is information for real estate agents and brokers. So if you're ever looking for content to share with your partners, that can be a great source for that information. So thank you. Appreciate it, Joel.
Thank you, Clayton. Everyone have an awesome week, and we'll talk to you next Monday.